Ever feel like when you hear about like accounting and stuff, it's kind of like shrouded in mystery,
Yeah.
like a secret language,
Mm.
like only a select few can really understand? Well, get ready, because today we're diving deep into the world of internal controls.
Oh, exciting.
I know, right?
Yeah.
And we're going to understand the systems that keep businesses running smoothly and honestly. And we've got some great source material. We've got excerpts from your accounting textbook, some tables, and even a few test questions to make sure you're keeping up.
Awesome.
Yeah, so this could be a good one. Um, so what do you think? Like when you hear internal controls, what comes to mind?
Like the first thing I think of is it's a company's financial safety net.
Oh, I like that.
It's the policies, procedures, and systems designed to ensure the accuracy of their financial reporting and also to protect their assets from loss or misuse.
Okay, so it's not just about like stopping someone from like walking off with a bag of cash.
No, no, no. It's much broader than that. So we're talking about making sure that like transactions are recorded correctly, financial statements are reliable, and that the operations are running smoothly.
I see. It's kind of like that behind the scenes stuff that most people don't even think about.
Exactly.
Yeah. So in our material, they had this pharmacy owned by Janet Morgan.
Oh, yeah, Janet Morgan.
It seems like she was doing everything wrong.
Yeah, that's a classic example of what can go wrong when internal controls are weak. According to this, she kept her cash and inventory records in the same drawer.
Talk about a recipe for disaster.
Oh, yeah.
So how do businesses, like, how do they make sure that they don't become Janet Morgan?
Mm.
Like, what are the things that they can do to make sure they have strong internal controls?
The first thing is the textbook lays out 5 key principles.
Okay, hit me with them.
All right, establishing clear responsibility, maintaining adequate documentation, separating duties, instituting independent verification, and using physical, mechanical, and electronic controls.
Well, that last one sounds interesting.
Yes.
Okay, so let's break this down a little bit because those seem pretty straightforward. But what does that actually look like in a business setting?
All right, so let's say you are running a restaurant. Okay.
Right, I'm running a restaurant.
You wouldn't want the same person who's handling the cash register to also be in charge of reconciling the bank statements, right?
Oh, that seems like a conflict of interest.
Exactly. So that's where the separation of duties comes in.
Makes sense.
By dividing those responsibilities, you reduce the risk of any one person having too much control and then being able to manipulate the system for personal gain.
I see. So it's like checks and balances on the inside.
Exactly.
Okay, and I see here that they're also saying that those principles apply across all areas of a business. So we're talking cash handling, accounts receivable, inventory management, even the electronic data processing environment.
Yep.
That's a lot.
It is. It's all interconnected.
Speaking of interconnected, they're also breaking down these controls into 3 main categories: physical, mechanical, and electronic. So it's like a blend of old school and new school.
It is. So we have everything from locked cash drawers and security cameras to password-protected software systems and sophisticated algorithms that are designed to detect anomalies. It's a constantly evolving field, especially with all the cyber threats and all the data breaches that are happening now.
So it's like a cat and mouse game almost,
Yeah.
where they're like trying to stay ahead of the people who are trying to break in.
Yeah.
That's interesting. So I'm looking at this table and it's saying application of the 6 principles of internal control systems, and it breaks down each area of a business.
Yeah.
And there's this one that really stood out to me: mandatory vacation policy.
That's a great one.
I know, it sounds fun, but I guess what they're saying is it's actually an internal control.
It is. So forcing your employees to take some time off, yeah, it sounds nice, but it actually disrupts their routines. And it can make it harder to hide any fraudulent activities. So let's say someone is cooking the books or skimming some cash,
Yeah.
If they're forced to step away for a week or two,
That's a good point.
those discrepancies might be more apparent.
Like a built-in audit almost.
Exactly. So it's removing their ability to like manipulate the records or cover their tracks while they're gone.
Sneaky. I like it.
It's just one of the many tactics that businesses use to kind of strengthen their internal controls.
That's so interesting. I'm also seeing they mentioned things like rotating employee duties, conducting surprise audits, and requiring dual signatures for certain transactions.
Yeah.
It seems like they thought of everything. Like it's this whole arsenal of ways to keep things running smoothly and honestly.
It is. And it's not just about preventing fraud. Internal controls are also there to help ensure the accuracy of the financial records and to streamline business operations.
So it's like a well-oiled machine.
Oh.
Okay, so that makes sense. But who's actually making sure that all those gears are turning? Like, who's in charge of making sure that the internal controls are actually working?
That's where internal and external auditors come in.
Okay, so break it down for me. Internal auditor versus external auditor.
Okay, so think of internal auditors as like the company's in-house detectives.
Okay.
They work for the company, and their responsibility is to regularly evaluate and improve the internal controls. So they report directly to management or like a designated audit committee, and they provide an objective assessment of the company's risk management and control processes.
They're like the eyes and ears of the company, right?
Yes, exactly. Constantly looking for ways to improve things, to strengthen the controls, and mitigate risks.
Got it. And external auditors, where do they come in?
Okay, so external auditors are independent of the company.
Okay.
They're hired by the company's shareholders to provide an unbiased opinion on the accuracy of the company's financial statements. So think of them as the ultimate check and balance, coming in from the outside, just to make sure that everything's above board.
So they're like the financial referees.
Exactly. And they conduct their audits based on generally accepted auditing standards, and then they'll provide a report to those shareholders, and that's publicly available.
I see. So they're kind of like the seal of approval,
Yes.
that everything is good, that they've looked everything over.
Yes.
That makes sense.
Mm.
Now, speaking of making sure everything's good and looking over things, in the test your knowledge section, they had this question. It said, imagine someone using the same password for years.
Oh, yeah.
What's the big deal? Seems harmless, right?
Yeah, no, in today's digital world, that's a huge deal. Using the same password for years is like leaving your front door unlocked.
Okay, you've got my attention now.
Yeah.
So let's talk technology and its impact on internal controls. That seems to be where things get really interesting
Definitely.
and maybe a little bit scary too. So I'm looking at this table that shows the evolution from like manual to computerized accounting systems.
Yeah.
It's pretty wild. I mean, obviously, things like speed, accuracy, and accessibility have been drastically improved by using computers.
Right.
But then you see things like increased risk of unauthorized access. And that's a little scary.
It is. It's a double-edged sword for sure.
Yeah.
Computerized systems have like revolutionized accounting, but they've also introduced these new vulnerabilities that we have to be aware of.
So it's still that cat and mouse game.
Yeah, you got to stay one step ahead.
Okay.
That's why having strong internal controls in place is even more important now, especially in the electronic data processing environment.
Okay.
So things like strong passwords, multi-factor authentication, regular backups, robust security protocols are absolutely essential these days.
So even though we have all this technology, it still comes down to the human element too.
Absolutely. Technology is only as good as the people who are using it.
That's a good point.
Yeah.
Well, this has been a really great overview, I think, of the fundamentals of internal controls. But can I ask, are there any limitations to these systems?
Right.
I mean, can they really cover every single scenario?
That is a great question, and it leads us to a very important point. While internal controls are super valuable, they're not foolproof.
Okay.
They are limitations to consider.
So what are some of those limitations? What are the challenges that companies face?
Well, collusion is a big one.
Oh, right. Like our friend Janet Morgan.
Yeah, exactly. If Janet and one of her employees had conspired to steal money,
Uh-huh.
her weak controls wouldn't have stood a chance.
Right, because they're working as a team to get around the system.
Exactly. And that can happen at any level of an organization.
So are there other limitations?
Yeah, cost constraints can also be a major factor.
Okay.
You know, implementing and maintaining sophisticated internal control systems can be really expensive, especially for those smaller businesses.
Oh, that makes sense. Yeah.
You know, they might not have the resources to invest in the latest technology or, you know, hire specialized staff.
Yeah, that's a good point.
Mm.
Anything else?
The other thing is the ever-changing nature of business itself. So, you know, new technologies, new regulations, new business models are constantly emerging.
Uh-huh.
And internal control systems need to be flexible enough to adapt to all those changes.
It's like trying to hit a moving target almost.
Yes, exactly. So that's why it's so important to have a process for regularly reviewing and updating your internal control system.
So it's not a set it and forget it kind of thing.
No.
You've got to keep evaluating.
Exactly. Internal controls need that ongoing attention, that ongoing adjustment to stay relevant and effective.
This has been a really good discussion. So we talked about the principles, the controls, the challenges, the technology, but what's the big picture here? Like, why should anyone care about all this?
Well, at the end of the day, I think internal controls are all about trust. Think about it. When a company has strong internal controls in place, it's saying to its investors, its lenders, customers, even its own employees, hey, you can trust us.
Yeah.
We're responsible, we're transparent, and you can trust us with your money, with your data, with your business.
It's like a seal of approval, right?
Exactly.
So you're saying that they're not trying to hide anything.
Right, exactly. It shows that the company takes its financial responsibility seriously, and it has systems in place to prevent errors or fraud or any other, shenanigans
Right.
that could damage its reputation.
Yeah, and that's so important these days,
It is.
especially with so many data breaches and financial scandals.
Yeah, absolutely.
Like consumers are more careful than ever about where they spend their money.
They are. They want to do business with companies that share their values
Right.
and that they can feel confident in. Strong internal controls are a key part of building that trust.
So it sounds like internal controls are not just for businesses. They're really for anyone. Anyone who wants to be more organized, more efficient, more financially responsible.
Absolutely.
I like it. Well, this has been a really fantastic deep dive. I think we've covered a lot of ground today. But obviously, this is a huge topic. So stay tuned, because in our next segment, we're going to delve even deeper. We're going to look at specific control examples and how they're put into practice.
I'm ready for part 2.
Me too. It's going to be good. Stay tuned.
Welcome back. I'm ready to get into some more specifics on those internal controls.
Me too. I feel like we've got a really good understanding of the basics, but now it's time to actually see how this stuff plays out in the real world.
Yeah, absolutely. And lucky for us, we've got this awesome table.
Oh yeah, I see it.
It's called Application of the 6 Principles of Internal Control Systems, and it breaks down exactly how those principles are applied
Perfect.
in areas like cash handling, accounts receivable, accounts payable, inventory, and even the EDP environment.
It's so detailed. It's like they've thought of everything.
Yeah, I know, right? And what's so cool is you can really see those 5 basic principles woven through each of those areas.
Oh yeah, that's true. Okay, so let's play a little game. I'm going to point out a control,
Okay.
and you tell me which principle it exemplifies. Okay.
Okay, I'm ready.
All right, first up, pre-numbered invoices are used for all sales. What does that one make you think of?
Maintaining adequate documentation.
Yes.
Every sale's recorded, no missing paperwork, no mysterious transactions.
It's all about that paper trail.
Exactly.
Okay, next one. Bank reconciliations are prepared monthly by someone who does not handle cash receipts or disbursements.
Oh, that's separation of duties for sure.
Okay, and remind me again, why is that so important?
You're adding that extra layer of checks and balances
Okay,
to help prevent errors or fraud.
so no one person has too much power.
Exactly.
Okay, last one. Background checks are conducted on all new employees.
That's a tricky one. But I'd say it falls under establishing clear responsibility.
Oh yeah, that's a good point.
They're making sure that they're hiring trustworthy individuals, right?
Like setting the tone right from the beginning.
Exactly. And like you said, these are just a few.
Yeah.
So many more.
There are so many. Like, did you know that some companies even use this thing called a lockbox system to collect payments from customers?
Yeah, it's interesting, right? So instead of those customers mailing their payments directly to the company, they send them to this special post office box
Okay.
that's controlled by a third-party bank. So that bank will collect the payments, process them, and deposit them directly into the company's account.
Oh, so it's like cutting out the middleman almost.
Yeah, exactly. So that way you reduce the risk of theft or misappropriation, within the company.
Okay, so that makes a lot of sense. Now, I know we talked about this before, but those external auditors, we talked about how important they are. But when they're actually going in and auditing a company, what are some of the specific things that they're looking for when it comes to internal controls?
They've got a big job, let me tell you.
Yeah, I bet.
They're responsible for evaluating the design and the effectiveness of the whole system.
The whole thing.
The whole thing. So they're looking at things like the company's control environment, its risk assessment process, its control activities, its information and communication systems, its monitoring activities.
Oh, wow. So they're not just checking the math.
No.
They're really getting in there.
They want to get a sense of how the company's operating, how it identifies and manages risk, and how it ensures the accuracy and the reliability of its financial reporting.
So are they like grilling employees and stuff?
Sometimes, yeah, it can be a pretty intensive process.
Wow. Now, I have to ask, this all seems very corporate, very big business. Is this relevant to like small business owners? Or even, I don't know, individuals?
Oh, absolutely. Internal controls are just as important for small businesses, even like sole proprietorships.
So even if you're a one-man show, you still need to be thinking about these things.
Oh, yeah, it's about protecting your assets, managing your risks, and ensuring the accuracy of your financial information.
What would that look like, though, for a small business owner?
Well, even something simple like separating your personal and business bank account.
Oh, that's a good idea.
That way it's super clear,
Yeah.
your personal finances and your business finances.
Okay.
And it makes it easier to track your income and expenses for tax purposes.
That's a good point. What else? What are some other things they could be thinking about?
Reconciling those bank statements regularly.
Okay.
That helps you to identify any discrepancies or errors early on before they snowball into like bigger problems.
Oh, yeah. You don't want it to get out of control.
Exactly. And as your business grows, you might want to consider implementing some more formal procedures,
Like what kinds of things?
like using those pre-numbered invoices or establishing some clear approval processes for expenditures,
Okay.
or even like hiring a bookkeeper or an accountant to help manage the finances.
Okay, so as you grow, the systems grow too.
Exactly. So it's like those internal controls, they can be scaled
Yeah.
to fit the needs of any business.
Now I want to ask, are there any downsides to internal controls?
Well, as with any system, there's always potential challenges and limitations. Sometimes internal controls can be perceived as like bureaucratic and overly restrictive.
So it's like too much of a good thing.
Yeah, exactly. It's all about finding that right balance
Okay.
between control and flexibility. If those controls are too rigid, it can really stifle innovation.
Right. You don't want to bog people down too much.
Exactly.
Okay.
And it can make it hard for employees to just do their jobs effectively.
So you got to find that sweet spot.
Exactly.
Okay. So what about the tech side of things?
Oh, technology has been a game changer.
Yeah.
When it comes to internal controls, it has really revolutionized the way that businesses manage their finances
Yeah.
and how they implement those controls.
I'm looking at this table that's comparing manual versus computerized systems.
Right.
And yeah, it's pretty obvious that things like speed, accuracy, and accessibility have all been improved,
They have.
like drastically improved.
Yeah.
But obviously there are some concerns as well, right?
Of course, yeah. Implementing a new accounting system is a significant undertaking,
Oh, yeah.
and it requires a lot of planning.
What are some of the things that companies should be thinking about if they're going to switch to a computerized system?
Well, first and foremost, you have to pick the right software.
Right, because there's so many out there.
There's so many.
How do you know which one's right for you?
It's all about your needs. So do your research, compare different vendors, and then you can choose a system that aligns with your business goals and your processes.
So really look into it. Don't just pick the first one you see.
Exactly. And once you've selected that system,
Uh-huh.
make sure you get the proper training.
Oh, yeah, of course. Your employees need to know how to use it.
Your employees have to be comfortable using that new software,
Right.
and they have to understand how it impacts their roles and responsibilities. And don't forget about data migration.
Oh, right, all that information.
Yeah, you're transferring all that existing financial data.
You don't want to lose anything.
You don't want to lose it. Exactly. It can be a complex process.
Yeah.
And then finally, don't forget, technology is always evolving, right?
Right, so this isn't a one and done.
No, it's not. You have to stay up to date on software updates, security patches, all the industry best practices.
It's like a full-time job in and of itself.
It is, but it's worth it. Because those computerized accounting systems, when they're implemented and they're managed effectively, they can enhance a company's financial operations and their internal control environment.
So it sounds like technology is kind of a double-edged sword.
Yeah.
It can be both a challenge and an opportunity.
Exactly. And that's why this field is so exciting. We're constantly adapting and innovating to find new and better ways to manage risks and to ensure the integrity of that financial information.
Okay, so we talked about some of the downsides of internal controls.
Yes.
But, even with the best systems in place, there's always going to be those limitations like, collusion, cost constraints, the ever-changing nature of business.
Right.
So let's break those down one by one, starting with collusion.
Okay, so As we've discussed, when two or more people work together to override those controls, it can be really hard to detect. It can happen at any level of an organization.
So how can a company protect itself against that? I mean, is there anything they can do?
Well, one way is to foster a strong ethical culture. One where employees feel comfortable reporting suspicious activity, something like a hotline or an anonymous email address, so they feel safe speaking up without fear of retaliation.
Right, so it's all about communication and feeling comfortable.
Yeah, and it's also important to have like a good, strong oversight and monitoring in place.
Okay.
Regular audits. Those can help detect patterns of collusion and identify areas where those controls need to be strengthened.
Okay, so what about cost constraints?
Right, so as we talked about, implementing these sophisticated internal control systems can be expensive.
Especially for those smaller businesses.
Especially for smaller businesses. So it's all about really assessing your risk profile and then prioritizing those investments.
Okay, so being smart about it.
Exactly.
Okay, and what about that ever-changing nature of business?
That's a big one, New technology, new regulations, new business models, they're always coming out. So your internal control systems need to be flexible.
Right.
They have to be able to adapt.
So it's like a constant process of evaluation.
Exactly.
Okay, so it's not something you can just do once and you're done.
Nope, it's a journey.
Okay, now in our materials, there's a test your knowledge section.
Oh, those are fun.
They are fun. They're like little mini case studies almost. So let's look at a few of them.
Okay, let's do it.
Paula's Preserves, a manufacturer of preserved plums and cherries, sells goods to retailers on credit. The accountant, Joanne Thomas, collects cash from customers, verifies the receipts, and enters the information to update the customer balances.
Ooh.
So what's going on there?
It seems like Joanne is handling a little bit too much.
Okay.
She's collecting the cash, she's verifying those receipts, she's updating those customer balances. That sounds like a violation of the separation of duties principle.
Oh, right. And why is that a problem?
It opens the door for fraud.
Oh, no.
What if she decides to pocket some of that cash?
No one would know.
And then just manipulates those records to cover her tracks?
So how would you fix that?
Easy. Paula's Preserves could implement a system where there's a different person to collect the cash, a different person to verify the receipts, and a third person to update those customer balances.
Okay, that makes a lot of sense. Okay, so let's do another one. Alexander Electronics salespersons record customer requests in the company's integrated computer system. Each salesperson uses the same password to enter the data.
Uh-oh, sharing passwords.
Red flag?
Big red flag.
What's the big deal?
It's a huge security risk, especially when we're talking about sensitive customer data. This violates the principle of using those physical, mechanical, and electronic controls to safeguard assets.
Yeah, you don't want to be sharing that information.
It's like leaving the key to your house under the welcome mat.
Okay, so what should Alexander Electronics be doing instead?
Each salesperson needs their own unique password.
Okay.
That's changed regularly. And they could even implement something like multi-factor authentication.
Oh, right, that extra layer of security.
Exactly.
Okay, last one. Raw materials for customers at Sylvester's shoe store are stored in the accountant's unlocked drawer.
Oh, come on.
Doesn't sound good.
This is like common sense. You don't store valuable inventory in an unlocked drawer. That violates the physical control principle.
Okay, so what's the fix?
They need a secure storage area.
All right, like a locked room or something.
Exactly.
Okay, so it seems like they really have thought of everything.
They have, and it's all about creating that system of checks and balances to protect the company's assets and to ensure the integrity of its operations.
Well, this has been so helpful. I really feel like I have a much better understanding of how internal controls actually work in real life.
Good, I'm glad.
But, we've covered a lot, and there's still more to explore. So in our next segment, we're going to dive even deeper. We're going to look at real-world scenarios that'll really make you think twice about how you manage your own personal finances. So stay with us. Welcome back to our deep dive into internal controls. It's been a really interesting conversation. I'm learning a lot. I have to say I never really realized how much goes into creating these systems.
Yeah, it's pretty fascinating, huh? It's like a big puzzle, and each piece is important for protecting a company's assets and making sure that it stays financially healthy.
Yeah, we've talked about the principles, the controls, the challenges, even the technology that's changing things. But now I'm curious about the big picture. Why does this all matter? Why should anyone care about internal controls? What's the real world impact?
Well, I think the answer is trust. Internal controls are all about building trust.
Trust.
Think about it. When a company has good internal controls, it's basically saying to its investors, lenders, customers, and even its employees, we know what we're doing, we're responsible, we're being transparent, and you can trust us.
So it's like a signal.
Exactly. It's
Yeah.
saying we're taking our financial responsibilities seriously, and we have these systems in place to prevent problems.
Because nobody wants another data breach or scandal.
Exactly. These days, consumers are really paying attention. They want to do business with companies they feel good about, and strong internal controls are a big part of that.
It makes me wonder, can individuals use these principles in their own lives?
Oh, absolutely. It's not just for businesses, it's for anyone who wants to be more organized, efficient, and responsible with their money.
Okay, so like how would that work? Give me an example.
Well, take the principle of separation of duties. You might not have different people managing your money, but you can still separate things,
Okay,
like having different bank accounts, one for bills, one for savings.
that's a good idea. It would definitely make me think twice before spending my savings.
Right. And it helps you track your money. You can really see where it's going.
Okay, what about that maintaining adequate documentation thing? What would that look like for someone's personal finances?
Keep those receipts and your bills, your bank statements. It sounds boring, but it's so important for staying organized.
Yeah.
And it makes doing your taxes a lot easier.
I definitely need to get better at that. So what you're saying is these principles can really help me manage my money, even if I'm not running a big company.
Absolutely. And don't forget about independent verification. Have someone you trust check your budget or look over your bank statements every once in a while.
Like an accountability buddy.
Exactly. It's a good way to catch mistakes and stay on track with your goals.
This has been so eye-opening. I'm walking away with a whole new understanding of how important internal controls are, not just for businesses, but for individuals too.
Me too. It's a constantly evolving field, but those main ideas, accountability, transparency, doing things the right way, those are always going to matter.
Well, that's a wrap on our deep dive into the fascinating world of internal controls. Thanks for joining us. We hope you've enjoyed this journey and learned something new along the way.
Thanks for having me.
Until next time, keep those accounting minds sharp.